Welcome to Mac and Blue, where we introduce you to who is building Arizona, bringing you the people and businesses that shape the landscape around us. From economic development and developers, underwriters and lenders, architects and engineers, to the very builders and suppliers that bring it all together. Now let's join our hosts, Robert Johnson and JJ Levinsky, aka Mac and Blue.
Welcome to Mac and Blue. I'm Robert Johnson, Vice President of Business Development of Torrey Contracting. I cannot believe I'm 2 for 2 now. The first time we did this, I gave myself a promotion.
His pay wasn't commensurate with it, though.
Didn't change. This guy is JJ Levinsky. He's the president of Mac and Blue. Mac and Blue. Okay, I'll get it. Blue Wave General Contracting. Okay. Wow.
We're putting Robert in a home starting tomorrow.
We just
so
talked about a podcast you were on where they did a bunch of bourbon drinking.
Yeah.
Yeah. We didn't drink bourbon here, and I'm already looped.
Maybe
so
we need to.
we are super glad to have, and I'm going to let you introduce them.
Oh, sure. I get to do it this
You
time.
do. I'm going to let you do it.
Oh, nice.
We're super glad to have Greg Gale and Holly Corley.
Yep. From Nova Home Loans. Okay. So, full disclosure, Greg and I met, I would say, 7-8 years ago.
Yeah.
Probably. We were in another business group we were just talking about earlier. It was kind of like a BNI group. It was called Am Spirit, right? Mm-hmm. Excuse me. And I don't know. I've just kind of you've always been on my radar. And we, as part of what Mac and Blue stands for in Building Arizona, we were like, hey, at some point we have to get some mortgage people on, as loosely as that is described. And I was like, oh, Greg will be the perfect guy.
Nice.
He's a civic guy. He's into all these other things. So with that, Greg and Holly, if you can, take a little bit of time to give us about your background, and then we'll dive into the business and ask you a million questions. So with that, go ahead.
Wow. Well, been in Arizona since 1991. First, thanks for having me.
Yeah.
Right.
Sure.
And I'll tell you, it's as I listened to, saw some of the people that you've had on, I appreciate being invited to the group. And I love that it's Arizona based and it's around Arizona businesses, so it's pretty cool. So thank you.
You're welcome.
Welcome.
So yeah, I came to Arizona in 91. It was on a bet to go to Arizona State. I was in.
Wait, did you win or lose the bet?
I think I won. I think I won.
Okay.
Looking back, I definitely won. So,
But that's true. You lost. You was a bet.
It was a bet.
Okay.
It was. I was in high school,
Okay.
and on the SATs, you got to write down like the college that you want to go to, where you want your transcripts to go. Mm-hmm. So I put UMass Amherst in Arizona State. Well, I didn't put it down until one of the guys opens up a magazine, and he's locked them at the top party schools, and he goes, "Hey, number 1 is ASU." And number 2 is UMass Amherst. I'm like, huh? And he's like, there's no way you would go there. I'm like, oh, I'd go there. He's like, you can't even get in there. I'm like, all right, I'm putting those 2 schools down. He's like, okay. He's like, you get into ASU, you got to go. I'm like, okay. Well,
And that was it.
I got in.
Well, where was home,
And
though?
I went. In Massachusetts.
You grew up in Mass.
Yeah,
Okay.
so UMass was about a 3-hour drive for me, and this was a 4.5-hour flight. Now, full disclosure, my dad worked for Delta Airlines.
Oh.
And at the time, in 91, it was easy to fly, and it was, hey, there's an open seat, drive to the airport, jump on a flight. You didn't have to wait a long time, and
Right.
it was technically free, right?
Technically.
So I could, technically, like you paid like $100 for like flight tax or something for that would come out of my dad's check. So it made an easy decision. So that's how I ended up even being able to come here. Now, the reason it was the number 1 party school was it took me 8 years to then graduate.
He's on the Tommy Boy plan.
Not a doctor. Not a doctor. I actually
Not a Greg Gale Esquire. No, not that either.
Okay.
there's no doctor under there. When I graduated, it was exercise science physiology. I was actually running and managing a martial arts school at the time. So I was so into martial arts. I got into it when I came here, just kept driving by this school. Something drew me to it. And I was like, I had to go in there. And I met this guy. His name was Mr. Fisher. And he ran a great business. It's one of those ones by chance, right? There's so many martial arts schools that by chance I fell into this one. And this guy was really good at the martial arts. But what's not common is he also ran a great business. There's not many at the time, this is back in the 90s, there wasn't many full-time martial arts schools. Most people had a full-time job during the day and then taught out of their garage nights and weekends because it wasn't a successful way to make money. This guy made money. He was in a college town. He catered to the college people. He had very few kids. Most martial arts are kids-based. because they can get the kids roped into a program,
Sure.
get the black belt program, and he was very much adult driven, and he did very well. So I was fortunate to get in there, and I literally would move my college schedule around to fit the classes I could go to at the martial arts school.
That's the reason it took so
Really?
long.
Thus, the
Gotcha.
reason it
Hold
took
it.
so
Go
long.
back though,
Yeah.
Greg. I think you're being humble. If I remember right, did you get here on a scholarship too, though?
I did not.
But you were a stud golfer, right?
I was a good golfer.
Right.
Yes,
Still is a good
yes.
golfer.
And
so
so
when I
did
so
you
good
try out?
research? Yeah, no, because when I went to go for tryouts, when they told me the regiment of it, I figured quickly that wasn't going to work for me because I had to work to go through school.
Gotcha.
And so it just wasn't in the cards.
But he beat Phil up at a kegger or two.
There you go. Well, it's
Right.
always handy.
He
for
was
that.
playing at that time
Yeah.
too. That
It's
was
always
a
handy
cool
for
time to
that.
be here. Yeah. So it was interesting. So I get in there, and that's what moved. I came here on a to go for computer systems engineering. I was really into computers, and then that didn't work out. So I then got into business and computers. That didn't work out. And by working out, I didn't work out because I didn't put in the effort to enter the programs.
We know that now.
Yes.
I mean,
So
now,
looking back,
yeah,
I can
exactly.
take full responsibility, right? And then it went to marketing, and then I'm training in the martial arts on the side, and I'm like, man, maybe I want to get into like more the physical stuff. So I actually did exercise science, physiology, and pre-med. So I did finish both, but then by the time I was done with 8 years, I was like, man, I don't really want to go to med school. And so I actually stayed with the martial arts school. And then you guys know, being local here, the Village, so DMB clubs. So the Village had just opened in Gainey. We were contracted in to train martial arts to the kids and adults. So we started an adult and kid program there at Gainey Village. And this is back right when they opened. That was like 2000. And so I was working at the martial arts school, training there, and I found out what the trainers were making. I was like, wow, these guys make good money because it's a high-end health club that charges a lot for personal training.
Right.
And I was like, man, I can make a lot more. So I went to my martial arts teacher. I said, hey, can we work a deal? I'd rather make more money and stay here with you. But he's like, no, man, this is as much as I can do here. Unless you want to franchise and go do your own thing, which he then showed me the math on that. And I was like, that's a lot. That was risky.
Yeah.
And looking back, I'm glad I didn't, but it was nice to have the opportunity. So I ended up becoming a personal trainer at the Villages. I had to actually go, I had my degree. I then had to go get, on top of that, a personal training degree and license. So I did the National Strength and Conditioning Association, the NSCA. I had to go through a whole program to get that. You had to have a 4-year degree to even get that program. So Gainey had a very high threshold. It wasn't like I could go online and take a certification for 2 weeks and get a job there. You had to have a degree somehow related, like exercise science, nursing, and on top of that, have one of the top rated programs as a certification. So that's how I got in there. But here's where we get to the mortgage part. So
I was going,
wow, we're getting there.
How
Yeah.
did this jump go?
So my very first client was a mortgage broker.
There you go.
Right. And so that's actually not how I got in right away. It's actually my girlfriend at the time, who's now my wife, got in. So she wanted to get into real estate. The mortgage broker goes, no, she should get into mortgages. And I was like, okay, would you interview her? She's like, man, I don't really want to. Okay. So she interviews her, and she hired her on as a secretary, and then moved her way up, processing, funding, accounting, closing, and then became the personal assistant to the owner for like 4 years. And so now, fast forward, I've been at the Village 4 or 5 years. I'm now looking to get out. I'm working 14-hour days. There's, again, there's a ceiling there, right? There's nowhere else to go unless you want to go open up your own gym and then have trainers under you and make it a business. So I finally figured, like, this isn't for me. So my wife now, she said, hey, there's a guy here at the mortgage company that's killing it and looking for an assistant. He's doing like, 18, 20 loans a month by himself. Like, just really good dude, runs a good business. You should interview with him. So I came in one Friday afternoon and sat down with him, and he penciled everything out for me. And, at the end of the meeting, he's like, hey, I got to go. I got to run and get a title check. Let's just meet up again next week. And I was like, cool. And then, this little voice inside me was like, dude, don't let this go. Because in the meantime, he could find somebody else, right? So I was like, hey, my afternoon's free. Can I just go with you? And he's like, yeah. So we jumped in his car. We drive up to the title company. We're chatting the whole time. We come back. He's like, hey, come on back in. Pulled out a yellow piece of paper. He's like, how much is it going to take? How much do you make? How much is it going to take to bring you over? Cool. He like literally goes through, here's the compensation to get you there. He's like, I'll get you there quick. And I was cool. I literally left. I called all my, it wasn't like a normal job where I could just say, hey, Village, I'm leaving. It was, hey, Village, I'm leaving. And then I had to call all these clients that I had trained for so many years. And what's interesting is not one of them was mad, upset, or shamed me.
Difficult. Yeah.
They were all like, good move.
Yeah.
You need to do that.
Wow.
No worries. And then I set them up with
That's
another
a validation
person.
then right there.
Yeah, I appreciate that.
No, I mean,
Yeah.
anyone in that position would want to feel that. right?
Yeah.
So I think that's
Yeah,
cool.
I was super nervous to call them all too. I mean, some of them
Oh,
I
I can
trained where I
imagine.
watched them and, you know, their daughters go through high school, college, marriage. I mean, it was like I was there for a good stint. And so it was kind of cool that that was the response, right? And so that's how I ended up ultimately getting into the business and then getting mentored by a top producer.
And you're off and running.
Yes.
Yeah.
Yeah. Yeah.
That's amazing. How about you, Holly?
So I am the branch business development manager
Okay.
at Nova
That
Home
fast.
Loans, right?
Yeah. She got it
BBDC
right the
for
first
short.
time. Yeah.
I know.
Death by acronyms. Here we go.
Yes. I'm really, I guess you could say, the right-hand gal for Greg. We do a lot together. So I'm just, my background before getting and working at Nova was in marketing, PR events, which is pretty much, I guess, what you would say I would do for the branch and for Greg and for the realtors and clients that he has and he's had for a long time.
Nice.
I'll tell you, marketing's so key, as you guys know. I mean, it's sales and marketing, right? And I took it for a while. I was so driven on, you know, work at sales, work at your skill set of negotiations and presentations and things like that. And then as I realize now, looking back, I'm like, man, marketing is really where it's at. And I don't know if it's just because of the environment we're in now, like now meaning like the last 5 to 10 years. But I think always you gotta like the people have to know you in order to even transact with you. And so I think that I put a lot of sales in front of the marketing piece for too long. Needed to add the marketing a lot quicker. So
What
that's
did you do to transform that?
Well, first was to start doing the marketing myself, but then I quickly realized, like, don't do that. Like, hire someone, have a right hand that can literally run that, because it's a full-time, if not plus, position to be on top of that and ahead of that. And even in a business that you want to be relational, not transactional, you want more repeat business. And yeah, just like yourself, like, oh, yeah, I remember Greg. I know Greg. We've never even transactioned. We've just met, but then stayed in touch. And, you know, you see a post or you see a video or you hear from somebody else, and then eventually something comes around. We're like, wow, we're connected again.
Yeah, you're singing my song. I was just talking to somebody about this last week, that it's actually it's a young man who's come on that has started working with me, that I tried to explain. It's all about the relationships you build, 100%. And I got into the debate with my wife last night about.
She won, by the way.
That's not good.
No, yeah, this one she didn't win, but it wasn't that kind of a debate. But it was. She was saying to me that she didn't understand all these connections on LinkedIn or any place else. You know, why are you spending your time, you know, doing this or doing that? And it was that, and you know this, it's not necessarily about that connection, but that connection has connections. And the number of times that I've gotten business leads, or that I've created, you know, fruitful relationships with people that are 4, 5, 6 connections deep.
Yeah, that's a good
that
point.
just happen to see me or know you from somebody else, and without that relationship, it wouldn't have come around. So
100%.
yeah, it's all about the relation. And I like the fact that you said that, a relationship business versus, I can't remember how.
Transactional.
There you go. Yeah.
Commodity.
Not that I'm baiting you on this question, but
Bring it.
in those last 5 to 10 years, as you went through that maturation, Greg, and I think everyone answers this differently, but I'm interested how it is specific to you and your industry. Is it branding you, or is it branding Nova, or is it branding both?
So I've always branded my team, and this is something so my mentor was JB. His name's JB Metzger. And he always said, dude, we're the Metzger Group, and we're the Metzger Group at wherever we got to be. So always brand us as a team, because it's never the me show. So it's Greg Gale, it's the Gale team at Nova Home Loans. And not because you might go somewhere. Like, I'm 14 years at Nova. It's been a great run. I don't see myself going anywhere right now, but what happens if something happens tomorrow there? I got to still be the Gale team.
Right.
And I don't know. I always use the restaurant analogy, right? You can never go to a restaurant and have one person there. There's got to be someone who was picking up the phone, someone cleaning the dishes, someone cooking the food, someone handing it to you. And when you go to the really nice ones to have a great experience, there's multiple people.
Oh,
Like there's someone that sat you there, then there's someone that took your reservation, there's someone that sat you down.
Arrange the flowers on the table. I mean, you know,
Yeah.
it really goes pretty deep.
Right. And so you have to cater to that and have a great experience for them, people to have the relationship to then come back to you and to stay in touch even in the future, right? To have somebody that you can leverage and help you with events and contacts and lists and, hey, call these people, like that kind of stuff. Hey, it's their birthday. To have those relationships and to go really deep, you need a team. So you have to market the team. And so it's always been, hey, the Gale team's hosting this, and the Gale team's having a class, and the Gale team's this. I may speak at it. I may be the one footing the bill, but like right now, there's 3 people back in my office that are fielding phone calls and leads coming in and realtor questions and working up flyers.
So back to the Gale team. What are the services? Like, what's your brand of business? I mean, it's beyond just loans and things like that. Why don't you, for the audience sake, tell us a little bit about like what is that encapsulating service brand that you provide?
Well, I think there's 2 things. There's 2 avenues I always go down, right? So you have there's the clients of the mortgage business, like we're doing loans for people.
Okay.
And then you have how do we help our referral partner, realtor partners? And so if I stick with the client part, it's you have the loans, you have the products, you have the knowledge to educate them on how to leverage their real estate to accumulate wealth over a very long period of time. And so I think that, you think of it like, again, the restaurant, right? I have the barista that just makes my coffee for me. And then you have the one like, hey, you want to check out this new thing we have over here? Or, hey, this is what we're doing. Or, that personal touch to it too. And so when you think like, yeah, we do loans, but ultimately to what purpose? It's to help them accumulate wealth. Right. And whether it's just through that one home they're going to buy that in a long time it's going to be paid off and they retire and they go, wow, I have all this equity. What do I do with it? And maybe there's a mortgage product for them, like the reverse mortgages and things like that. Maybe they're pulling out some equity to do something with, whatever. Or it was for their estate and the kids now got a house and like, hey, let's wipe out the whole entire family debt with mom and dad's house now that they passed away. Like there's so many things that can happen with the house, right? Whereas if when you contrast that and say, hey, mom and dad rented for 30 years, and then when they passed away, they left us nothing because they rented, right? And so I think of that, of taking people through a kind of what, like, they don't know till they know, and saying, hey, imagine if you purchased this home, and in 2 years, you rented that one out and went and got your next home. It's not about you guys. Like, I'm not in that first house I ever bought. Like, are you still in your first house? No. Still in your first? Cool. I wish I owned my first house, though.
No kidding.
Right?
Yeah.
Yes. And I think that when I ask a lot of people that question, they're like, yeah, I wish I did too. And for one reason or another, whether it was training from before with our parents, it was like, no, you had that house and then you sold it to go get the other house and use the equity from that one. Cool. But what if your parent was like, hey, why don't we keep that one? And you can financially do it. We'll take the equity out of that one and go get another one a little bit, step up. We'll rent this one out and then step up. And what happened if over 10 years, imagine if I could take someone that was in their 20s or 30s right now and show them this path that in their 40s and 50s, they had 5-6 rental properties
Yeah, it's
under
a
them.
different story right now than it used to be. You were exactly right. That's what it was.
Right.
It was sell your house, buy another, sell your house, buy another.
Yeah.
So
And that was the story.
accumulating wealth is
Different
much-
conversation. Right.
Yeah.
And not only there, right? So I'll tell people, hey, look, make sure you're maxing out your 401k. Make sure you're using your IRA. Like, I'm not a financial planner, but I'll refer them to a good one. But they need to understand the whole wealth accumulation cycle. And the earlier, the better, because we all understand compounding. But if I can be the loan officer that's not the order taker, that says, okay, here's your loan. You qualify for this. Good luck. Go get the house. I'll help you close it. And then get to the agent, close. Here's your keys. Like, that's just a transactional order taker. But when I say, hey, let me show you some other options. What if you didn't put so much much down, right? Like if you put 5% down on a house, any house, okay, 5% down, and then let's just say it appreciated at 5%, just to easy math. And over the next 5 years, that would be 25%. You 5 times your money, right?
I saw this. I watched that video this morning, by the way, where you did the math about the
return on
that very
investment.
thing.
Yeah.
Yeah.
Yeah. And so if I took
Did
someone
you have to take your socks and shoes off to follow?
But it's so simple that what's so funny about it is that we don't think about it like that.
Right.
You think about the 15 grand that you had to put down, period. Not, and then, okay, that goes up, then like the stock market example, which you were saying about putting in stocks as opposed to buying something with it. We were just never taught that when we were little. I mean,
Right.
That's not the way we were raised.
Yeah. So to give you some context, it's if we bought an Amazon stock, you got like a piece of Amazon, and let's say it was $1,000. So your $1,000 will go up by 5%. But if I took the same 1,000 and put it in a house, the whole asset goes up by 5%. The entire asset. So that's what we're talking about. That the power of leverage through the mortgage and the real estate is where the power is. But the math is the path to figuring out how you accumulate wealth with it. And again, it's a long-term thing. But imagine if we could all go back 10 years, 15 years, and be doing some of the things that I'm educating people on today.
exactly.
Where would we all be? Wow. So now let's just do it now, right? The best time to have planted a tree was 20 years ago. But if you didn't, the next best time is today.
Right.
So in 20 years, you'll have a big tree.
Torrey Contracting, your full-service Division 9 contractor. Torrey Contracting operates with a smaller, hands-on team. This cohesive structure results in superior workmanship and economical solutions. We deliver projects with unsurpassed commitment to quality and stewardship of budget. Torrey Contracting, small enough to listen, big enough to deliver.
Yeah. It's good stuff.
So what other coaching things are you doing then, Greg?
Yeah, so the part about I look at coaching in both ways, right? Like you're in sales and coaching. So
Okay.
for me, I'm coaching the consumer on how to leverage the loan, leverage the real estate, accumulate wealth, and showing them that path and other options. And then it's coaching of the realtor. So I've worked for a company since 2014 called The Core Training. So they're a national coaching company of lenders and realtors. Some are Zoom, where you're countrywide, and then some are live. Like we just got a conference 2 weeks ago where you have 600 people in the room, both realtor and lender, that we're coaching them on various business tactics. I think it's common, like we talked about before, the chiropractor, right? The chiropractor is good at chiropractic. They're just not great at business.
You see that so
Sales,
often.
marketing.
Yeah.
any
We all
business.
know people that
Yeah.
are great at what they do, but they're just not great at business.
Yeah, like the baker. You're good at baking. But the second they opened up a business, thought it was a great idea, they couldn't hire, they couldn't train, they couldn't scale, they couldn't price it out. It's a different skill set, right? So I look at it from going from sales to management to leadership. So we help the loan officers and realtors go, hey, you're great at real estate. How do we now leverage some people, build a business, have a P&L, right? So in the beginning, we break it down into three things. Basically, we're building how do you generate more leads? How do you then build a team to cater to the clients, to reduce your hours, to enhance the experience, to build that referral-based business? And then how do you track your money? How are you running a P&L and a personal budget at home? Because it's not so much what you make, it's also what you keep. Right? Like if you taught somebody how to make more money, that's great. But if they outspend what they just earned, that's not a good model, right? But man, if I can teach them how to be a power saver and how to structure that and where to put it, right? How to invest it properly, and then it just compounds, and then it's to give back. That hidden fourth one is just how am I giving that back to the community?
Yeah, that's a big win that we haven't even touched on yet. But yeah, very, very, very interesting stuff. Yeah, I forgot what I was going to say.
Well, it goes back, like I said, there's two, avenues that I look like in our business is how are we taking care of the clients, which is
exactly.
the mortgage
Yep.
and the journey and using it like a wealth management tool for them, right? Like, let's just have a different conversation. It's not the order taker, right? And you really can have a much better, profound impact on someone's life when they take that seriously, that conversation, but then when they apply it. I mean, I have a gal, we've probably done 8 or 9 loans for her. She's got 4 properties. She's debt-free except for the houses. The others are rented out. She's got her nice primary that she's like, I might be here forever. She's in her 30s. I mean, it's just Like those are the ones like, wow.
Good
Yeah.
for you.
Yeah.
She
Massive win.
like good for her. She followed the plan. I'm like, and now she's getting with a wealth manager to take all the extra money, and she's got her 3 months reserves sitting up there. I mean, when you have reserves, you don't have debt. Because when you have reserves and something breaks or car breaks down, or you just use your reserves, you're not having to zing the credit card and get into that hole. Now, most people are digging out of the hole or have the hole and need to dig out of the hole.
Yeah.
But once you dig out to a break even and the credit cards are gone, you've got to get 20, 25 grand set aside somewhere
Yeah.
for those emergencies and things that you got that just pop up.
Sure.
That you would then zing the credit card for if you didn't have that. And then from there, it's where do you put all your money? So she's in that stage. But she was way over here in the, I've got a bunch of debt and I want to buy a house. And now it's been probably 7 years that I've worked with her. But to see where she's gone, it's just awesome.
Yeah.
Awesome. So that's what I really like, that piece. And then the other piece was, and where Holly really comes in, is that how do we help the real estate agents? How do we help them do that? Like, how do we help them to generate the leads? How do we help them build their team so they can cater to them better? Hosting events, things like modeling my business, but as a real estate
Back
agent.
to the marketing. Yeah.
Because look, when I can help them win, I know that, and I'm coming alongside them to help them win. Holly and I are both teaming up to say, hey, how do we help you win in this market, whatever the market is? Then I know that they will help us win. It's a very simple concept.
Let's talk about the market. Because,
sure?
I mean, we've only got 30 minutes left.
do it.
So it clearly was a seller's market and has been for a while. Am I correct in that? I mean, with the housing prices up
Right.
here, I say that, but if you bought one of those houses up there now and prices going back down, you actually have some equity that you can do some things with now. Either upgrade your house or move into something and use that money, that equity, to do something else with.
Right.
But interesting time right now in the market.
Yeah. Well, and I think to say, like, the reason I pause there is because you just, like, like, technically we can say it's seller's market because of the supply and demand, right?
Right.
But then I always look at, like, why would I want to sell the real estate? So is it really a seller's market?
Correct.
And when they're
Correct.
sitting on a 3% interest rate, do they really want to sell when they're like, man, I got to go to 7, right? But for me, I look at it like, man, the buyer's opportunity has just sprung out because they were in such a, although rates were low the last couple years, especially during the 20 and 21 COVID times, when you had that high 2%, low 3% rate, I mean, it was awesome. But it was good for the sellers too because they were getting mass appreciation, right? So it was kind of it's weird.
Pricing, housing prices were crazy.
Oh yeah. Well, I look like we talked about this morning. I was training a real estate team, and we talked about that conversation. Like, you got to go backwards in time and say rates might have been low, but you were not getting the seller to pay for anything. Your seller concessions, any rate buy downs, repairs are usually 0.5% to 1% of the purchase price. So if it's a $500,000 house, there's $2,500 to $5,000 that you as the buyer are going to come out of pocket to fix. The sellers don't need to because there's 15, 10, 20, 30 people right behind you ready to go in the offer, right? You had to waive your inspections. So I really hope there's no foundational issues that you're gonna have to walk away and lose your earnest money.
Oh yeah, I didn't even think about that.
Like, you were in a risky spot. Now again, was there a benefit? Yeah, I was getting a 3% interest rate. What was the cost though? You were coming out of pocket, and some people were having to bid over. Right? We've heard the numbers. The highest in the room this morning was 50,000
over asking
over
price.
asking price. I had one over 300,000 that was over $4 million property, but it depends on the price. But you were bidding over, right?
Yeah.
So let's say realistically, you're at a $500,000 purchase price, 10,000 over, for sure, right?
At least.
So you think of all those things that you were not getting credits for, that you were just having to outlay yourself. Here's my closing costs. Here's my down payment. Here's my I got to fix all that stuff. Here's another $5,000. Like, you were going deep. Well, now it's turned around, and you look at on a $500,000 deal. I mean, they could be getting 22, 25, upwards of 6%, $30,000 to use for a bunch of stuff. I could pay your closing costs. You could get the rate bought down permanently, which sometimes we're not advising. It just depends on the math. Or they do what's called a temporary buy down, which you're seeing advertised everywhere, where basically there's like a sub account over here, a bank account that holds a certain amount of money that subsidizes your mortgage payment for, and it can be the first 12 months, the second 12 months, and even now there's a third year of it the third 12 months, right? So call it 3-2-1 buy down. 2-1 seems to be the popular because of the money. But when you think about the math, right? So if I had a $500,000 house, now I'm getting these credits that I wouldn't have had. I'm literally only coming in with my down payment. I can wait my full 10 days in Arizona's inspection period. So if something's weird, I can walk away, get all my money. Not at jeopardy. I don't have to waive my appraisal. I'm not having to pay 5 or 10 over. There's another 5 or 10 grand on top of the 30 that I'm getting. The repairs, seller's going to make those $2,500 to $5,000 repairs. So if I said to you, JJ, hey, would you rather have the $25,000 in your bank account, or would you rather pay it like you were 2 years ago? I'd rather keep it. Cool. Well, let's take it out into the future. Let's go forward, and I don't know when. Next year, maybe it's the year later, and rates go down to 5. What will happen again? It's not going to be like it was at 3s and 2% range, but at 5, you got a lot of people on the fence right now. They're like, man, I want to get in on the housing, but I'm skittish because the rates are high, and they're not understanding the benefit of the 20, 25, 30 grand that they might be leaving on the table that they're not going to get in the future. So in the future, like, you go to the seller, and seller's like, no, man, you need to make those repairs. I got this other guy that wants to offer on it. There's no seller concession. You want seller concessions? I'm sorry. No contingency. Sorry. Right, there's all these things that are going to come back to life that are going to be a missed opportunity today for those buyers. And again, I'm not trying to sway them to buy right now. I would just be remiss if they came back to me in 9 months, rates drop to 5, if that's the time, like whenever they do. Right. But let's say that in 9 months, buyer calls me up and say, hey, I'm ready. I'm like, cool. You need an extra $20,000 because you're paying your closing costs. You're going to have to buy your rate down. You're not going to do any of those repairs. You might have to pay over, because there's going to be a lot of people coming in. You guys know, being in the new build arena, there's a lack of households because of the household formations. Correct. There's just a lot of stuff happening. Like, I graduated college. I want to go buy a house. I don't want to rent. Or, hey, I'm getting divorced. I got to live somewhere, and I'm not going to stay with her or him. So I got to go form another house. So these things are happening. Hey, I'm 33 and still living at home. It's time to go. The highest population, like the average first-time home buyer is around 33 years old. And for the last couple years, the highest population rate of 33-year-olds is in the market. Right. So that was a stat from marketing. Like, hey, you need to market for the next 4 or 5 years, market that 30 to 35 range, because those people are entering that space, and that's just the majority of people that are buying is that range. So get in front of them. Well, that's more household formations that are needed, yet there's nothing. And you drive around town, you see all these high rises and condo complex and apartment complex. Those guys have deep pockets for research. They didn't go, huge. Yeah, there's very little demand. Let's throw out this 100-unit building. No, they were like, hey, there's a high demand. Let's throw up this 100-unit building. So that's all. Like, I rely on their data. I'm like, wow, that if they thought that was a thing, that's why they're building.
Yeah, the whole we just again conversation Friday or Thursday over a multifamily. And all of those discussions are still coming into play. What's the rents per square foot? What are you getting on this? What are you getting? So it has to make sense to build it.
Right.
How does the math work in all this? I'm curious. I know you were talking about the numbers, but we go back to the math. From the 3% now to the 7% that we were just talking about, and all those extra monies that you're paying, how much of that gets absorbed from that in going that much less interest rate?
Well, I think what you lose with the interest rate going up to where it is now is really the purchasing power.
Yeah. Okay.
So someone buying at 3% versus 7% is they're just not getting the house that they wanted.
Okay. Fair enough.
Or they have their sights set on. Now, here's the thing. I say I'm just going to show you what you do qualify for. Now, with that temporary buy down we were talking about, that doesn't impact their qualifying to go higher. It just gets their comfortability for being in the house with that kind of payment. And that program's been around for decades. So that program came about more from the point of view of, I'm moving to town with my spouse. I got the job transfer. Spouse isn't working here yet. They were back there. So we're going to be a little strapped. So although I qualify, it'd be nice if we had a lower monthly payment until she finds a job. Should be within a year or so. Anything you got for me? and then we do the temporary buy down. And you can either have the seller pay it, or we could have your reload company pay it. So that program's been around a while for creative things. It just went away because rates were so low, it didn't matter.
Sure, nobody
So
cares.
now that rates are high, it's come back to fruition. So making that sense of that. Now, the permanent buy down, where we say, hey, we're going to give the bank a chunk of money, like 10 grand. And we're going to buy your rate down from 7.5 to 7. Now, the math of it needs to make sense, right?
Right,
Like,
right.
oh, you're saving $100, but it costs you 10 grand. That's not working. That's 100 months. No, that's 9 years to recoup your money, right?
Right.
And so the math needs to make sense. What's cool, that temporary buy down we talked about, where they create that little bank account that subsidizes your mortgage payment. Well, if you refinance anytime during that 2-year or 3-year period that we have, you get the money back. Depending on the investor, they either pay your principal down or they give you a check back. So there, you get the money. If I do
Right.
the permanent buy down and say, hey, to qualify for that house, we got to pay the 10 grand. It doesn't save you a lot of money, but it'll bump you another 20 grand in purchasing power, whatever the math is. Do you want to do that? Well, that you never get back. So
Right.
you refinance in 4 months, you don't get any of your 10 grand back. You just gave it to the bank. So that's something that the buyers need to understand. But usually you're not getting that much power out of it. And again, I'm more educating them on, hey, if you got to wait, you got to wait. But if we can get you into this one, and your situation now is you're renting at $4,000 a month, and I could get you into this house, and even though it's not what you want, let's get you into it, because now you'll have some built-in equity that's going to accrue over time, and then at the time we're ready to rates come down and you can qualify for what you want, or you make more money, or we can count some rental income off of this house.
Right.
Now we can qualify you for the next one. Because once again, I'm not in my very first house. I'm in like 6, 7, 8 houses deeper now, because I'm 49.
Right.
Right. But as you go through life, you just keep accumulating that price. So that might be a thing. I just need to be able to educate them on it so they don't just get shut down with, oh, rates are there. I only qualify for that. That's not what I'm looking for. I'm going to wait.
And I hear that all the time. I mean, that's as deep as people dig. It's just like, oh, rates went up. Nope, I couldn't less house. I'm just going to stay. Yeah. Anyway.
What, for the audience sake, then, even even with the, let's say the Fed goes up another 50 bips next month, everything's already baked in though to where you guys are lending at right now, correct?
Usually.
Yeah.
Yeah. Yeah. And the rates just can't come down until inflation comes down.
Right.
So whatever they do with the Fed funds rate, up or down, it's the sentiment of the market, but it's also like what's happening with inflation. And until that gets under control and we see some positive signals of that coming down, the rates are going to stay where they're at.
Yeah.
Right. Yeah. And we just don't know. There's so many factors, and some factors are, like we were talking about today, you got elections, you have wars, you've got catastrophic things that just happen. We just don't know. But I'll tell you, it's hard also going through a winter. I know we talk like in Arizona, right? But things just kind of slow down during the winter. People spend less money. It's just, now you've got all the economics, like unemployment. There's just so much uncertainty right now.
Do you, so let's go down that one. Do you lend to a lot of Canadians or, snowbird type people, or do you see?
We do a lot of snowbird, not a lot of, I don't see a lot of Canadians
Okay.
anymore. And I don't know if they just have a better channel for banks like Royal Bank of Canada. I don't even know their exchange rate. So I
Right.
don't know if it makes sense for them or not. But we used to, there was a time where we used to have a lot of Canadians coming down.
Right.
Second homes have almost doubled from last year. And I don't know if it's a COVID thing where
Even
they're
with the
like,
Really?
price of homes
Oh,
being
yeah.
there, but because of the interest rate,
Yeah.
because it's been lower.
yeah. And again, some people have the money, right? But they also understand two's better than one when it comes to appreciation, right? You got one $500,000 house. If you can afford another one, and if you're going to be there 6 months, you can still rent out the house, right? So it could turn into an Airbnb pretty quick. And that's very popular in certain areas. So we've done a lot of second homes here in Arizona here. We've also done a lot up in Flagstaff too. We have an office up there. We do a lot of business up there, and that's a big second home market.
And they're being used primarily for Airbnbs or for something like that?
I'd say primarily vacation home, but then
gotcha.
when they understand the math and what they can do, they end up going that route. Even if it's a few weeks, it's just extra cash that they could have. Now, I think what happens is they get the bug. Like you get that first check and you're like, ooh, mailbox money.
Yeah.
Like, wow, that's a thing. Like, honey, I think we can make this work. Like, it's just kind of getting over you know, you're not going to answer the phone at 2 a.m. when the toilet breaks down. You're going to have a property manager. You're going to, like, there's a lot of, like you said, there's a lot of misconceptions with stuff. So they just don't know what they don't know, or they don't dig deeper and ask enough questions.
Yeah, I mean, this is really opening up my mind. So I guess Airbnb and the like has been a positive thing in the real estate market as far as buyers.
For sure. Oh, yeah.
Which I never even thought about until just now.
Well, so I would say about a year, gosh, time just flies. Year and a half ago, Fannie Mae and Freddie Mac came out and added an extra fee into their mortgage rate. So they call it the servicing fee for them. So basically for a second home or investment property, they increased the rates if you're going to them.
Right.
And they didn't say, like, here's why.
Yeah.
I think it was because there was so many people
Sure.
purchasing that they wanted to give the owner occupants a better at bat. So
Sure.
they made that product more attractive by having that price more attractive. Yet, you know, so we'll jack this price up. That didn't stop people because it's all still about the math. Or what happened was people then created new product that didn't sell to Fannie and Freddie to have the fee.
Gotcha.
So you would sell to a local bank and do a portfolio loan that did not go through Fannie or Freddie because they added that little fee. It's all about the data.
Yeah, and back to it's all about the math. I mean, so real estate is still a good investment.
I tell you, when you do the math of it, again, I still think it's situationally dependent, right? But I think right now people miss the math and going deeper, as you mentioned, of rates are high, I can't afford what I want, or they just say rates are high and they don't even call. They're like, no, rates are high, we're not going to do anything. And I'm like, okay, let's just take a look at it, right? Like, it doesn't hurt to check the numbers to see if it works. But also just understanding, like, man, I just don't want to be part of the crowd that's going to go by when rates drop in the fives, maybe even, I mean, Fannie Mae projected 4.5 sometime next year. And they're not, I mean, they have data analysts. So, like,
Right.
I'm not saying it's gonna, but if there's a chance, they'd know it. But let's say that happens. There's even more people coming into the market.
Mm-hmm.
And maybe it's the ones that are saying, man, we missed out on some of those Airbnb or investment property, like long-term rental opportunities, right? Like we're talking about, there's a lot of opportunity in that space.
There comes a time when dreams become a reality, when you see your vision materialize into a true work of art. And the only way to get there is to choose a general contractor who shares that same vision and knows how to bring it to life. At Blue Wave, we aren't so big that we've forgotten where we've come from, and we aren't so small that we can't care for your projects regardless of their size. When your vision deserves safety, perfection, timeliness, and expertise in order to become a reality, trust Blue Wave to get it done right the first time.
Yeah, it's just crazy.
So are you only doing, again, for the audience sake, Greg and Holly, is you do more than just B2C, right? I mean, you'll do some B2B work. Like let's say I'm a developer or something, and I come and get a loan from you to develop a four house, like build to rent little mini commune type thing, or do you typically not do that kind
We
of stuff?
don't do that.
Okay.
Yep. Mostly just straight resale. We'll work with some builders on new builds. We'll do land, but it's mostly just residential only, not commercial or development stuff.
That
Yeah.
development stuff.
Yep.
And then what about you? What about refi products?
Lot. Yeah.
Lot.
And right now, I mean, we're literally presenting right now when we do a pre-qualification for someone, I show them like, hey, here's your rate and your payment, what you qualified today here. Here's what we're going to do in the future if rates drop to, let's say, 5.5 conservatively. Here's what your payment will be. And we're not charging any of our fees on there, too.
Right.
Because I know it's going to happen, so why would I double dip?
Exactly.
Right? Hey, JJ, I already know I'm going to refinance you in the future.
Yeah.
Right. So, hey, so you're not going to pay my house fees. We're going to take care of that. I'll have most of your paperwork anyways. I'm happy just to have your repeat business. Right. So,
Yeah.
but I'm showing them now, again, future pacing, like, hey, right now your payment's going to be $2,700, but in the future it's going to be $23. Let me just like somewhere around here is where you're going to land. Okay, cool. But you're comfortable here with the current number of 27. Yes.
But
Cool.
again, back to what we were talking about. So we can get you into X now, Here's a plan to get you to Y later.
Correct.
Yeah, I think that's brilliant. I was hoping you were going to answer that way because I think again, what Robert was saying, we as a society are a little naive to look just here instead of here.
Mm-hmm.
So
Like it happens in a lot of things, right?
what happens in all of
yeah,
our
it
respective businesses
Mhm.
when we look at the cost of money across the board. What so what aren't we asking you about your industry that's cool right now? Like any new things, any new angles, any new products, any new
Well,
state of the state type stuff?
well, I mean, you asked great questions already. There's been one product that's kind of emerged. It's called the debt service coverage ratio loan. I don't know if you guys understand this, but or have heard of it. I know you'll understand it. It's basically where we calculate the payment for the house. So let's say it's going to be $2,700, and the realtor can go on to MLS and tell me what the rents are in that area, and it can actually be equal to or a little bit under. But definitely if it's equal or over, it's a deal. So it qualifies off the payment of the house and the payment of the rent, not the income of the borrower. So I could have...
now, wait a minute. Now, that's strange.
Right. So it's the debt service that's covering, right, the
ratio.
mortgage,
Makes
right?
sense,
And so,
yeah.
and you're putting 20. If you have like, let's just say I have my $2,700 projected payment, but the rents are $2,500. Like, oh, I'm a little short. You could put a little bit more down, not to bring the payment down, but just because the lender will go to 75% below the rent for your payment, as long as you have enough equity, right? So we'll work the equity in there to make it a deal. But you could be making, I don't even know what minimum wage is now, but let's say you're making $14 an hour doing whatever, you can qualify for that if the property, the rent will offset the debt in regards to the mortgage payment. So that's been a really good product. Now, I would tell you the other day that it penciled out. We were locking at 10.1% interest rate. 10, because it was an investment purchase. They didn't have awesome credit. I'm like, hey, it's 10%. And I forget what the payment was, but the rents were exceeding the payment.
Oh my gosh.
Really?
Right? And I was like, I called the realtor. I was like, dude, are you serious? He goes, I'll send you the comps, man. They sent me the rental comps. I was like, wow. And so, I mean, it's
And
a
from
deal.
underwriting, that was all.
It's a deal. Yeah,
Wow.
it was already closed. Yeah. So it's not so much the rate. When it comes to investment property, it's not, because it's more is the payment covering. Now, will my spread between payment to rent get bigger and I'll make more money on the deal when the market turns and I refinance? For sure. But for now, you're making the money. But remember, you have someone else making your mortgage payment.
Yeah.
You have the appreciation. You have the depreciation, which I'm not a CPA, so that's a disclaimer. Call your CPA. But there's tax benefits for this as well, right? And I always list the last as cash flow, because that extra little bit is awesome, but it's the first three that are the knock it out of the park home run for investment properties. So that program, DSCR, has been a great program. Most lenders have it now. We actually do it in-house underwriting, so we don't have to send it out anywhere. It's just a cool product. Again, when we talk about this, like, man, how do I build up a portfolio? Like, what would it look like if you had 5 houses and you made $500 off of them? Okay, you're making $2,500 a month. But that's $2,500 extra that, remember, if I'm getting $2,500 cash for those, that's like earning $5,000 from my job, because you get taxed. It's a $60,000 a year job, right?
Yeah, and but you mentioned that, like, the minimum wage guy that's taking a look at this hypothetically and saying, I can buy this investment property. Yeah.
Now,
That's
again,
not me.
most people will hear that and go, yeah, but the minimum wage guy might not have 20%. Well, they might not have 20% yet.
But once
But
he
if they had a
knows
goal,
about it,
Yeah, once they know about that and like, oh, I really could qualify to do that. Like right now, they think they don't know. And so it's just a lack of information,
yeah,
right?
yeah, back to
Getting
that
the word
again.
out.
Yeah.
The other thing, it's just not sexy. It's just what's simple. Like, what are the simple things that people aren't doing? Like, you know, for us with working with the real estate agents, it's building that relationship-based business. Have they just recently called their database? Or do they have a system in place that repeatedly calls their database over time? And this can be any business. Like if my pool guy
Sure.
called every one of their clients to say, hey, I just wanted to thank you as we start to unwind the year. I really appreciate you, Mr. Gale, for being a client and allowing me to, you know, clean up your pool. And I love that your dog jumps on me every time I'm there, but you know, you've been a client for life, and I really love you. Hey, do you need anything extra special from me as we move into the holidays? Has everything been to your satisfaction? Are we doing well for it? Yeah, dude, super clean. Thanks, man. Okay. Hey, can you do me a huge favor? I could really use your help. Do you know any of your neighbors that have pools that you could make an intro for me?
Sure.
I've never asked. Oh, thanks. Would you just keep an eye out for me? Okay. Thanks, man. Like, if he called every one of his 400 clients, is he going to get a couple referrals out of there?
Absolutely.
Is he going to get them really close to the people that he's already servicing pools, and so it's super efficient? He doesn't have to go market a new area of town, hire a new crew, get another truck. He's like, dude, add 1 or 2 homes to each of the ones you're already doing, and you could quadruple your income with less expense. And what was your advertising budget on that? You had a phone,
Yeah.
right? So like things like that. But could the real estate agent, hey, JJ, you know, I know we closed on your house 2 years ago. I was just looking in here. Wow, you've almost doubled in value. Congratulations, right? Like that's a call now. Or, hey, you've went up 50%. Now, I'm not calling because you don't want to sell your house, but I did want to find out, what are your long-term real estate goals with that wealth piece of real estate that you have right now? Like, what are your goals? And then just shut up and listen. And then they tell you. And it could be, man, they're going to take me out of this place in a box. I love it. Or, you know what, Greg, I'll tell you, I'm kind of regretting my purchase. You know, I bought 2 years ago. It was like my 8th pick. You know, it's okay, but I really wanted the bigger yard, and it's just not that big. I wanted the pool. I settled. I wanted 3 cars, not 2. Like whatever the answer is. But there was a stat out there that said it was 26% of home purchases during the COVID and pandemic times. 26% were dissatisfied, resentful, or regretting their purchase.
That's just crazy.
That shocks me.
Really?
That percentage? Yeah.
Well, think about it. Like let's say you go to a nice restaurant. what do we want to pick now?
I know we do.
Ocean 44.
Okay.
We go to Ocean, and you walk in there, and you're like, oh man, I'm craving that chillin' sea bass, miso drizzle, whatever. Hey, and the waitress goes, oh, I'm so sorry, we just gave the last plate out. What else could I get for you? Oh, the fillet? Oh, I'm sorry, we're all out. Shrimp? We're all out. How about what's the tilapia? I don't know, like whatever. And then you go, the tomahawk, whatever. And then they're like, okay, it was your 5th pick. Yep. You're leaving that place. You're full. Like, oh man, it was so good. And you're driving home going, I still want the sea bass.
Yeah.
Yeah.
Right? And so they're literally driving up to their house every day going into their 2-car garage going, I wish it was 3.
Sea bass. All I'm thinking about is Dumb and Dumber, the movie right now. Hey, Seabass is picking up the tab on this one. Sorry. Guy problem quoting movies.
Squirrel.
Yeah.
No, it just going to like that stat, that's a high number, but it doesn't surprise me just the concept of that.
No.
Like imagine pulling up and you really wanted 3 cars because you wanted to store some stuff, and your kids are getting older and they got bigger bikes and bigger toys, and you bought the 2-car.
And all those things resurfaced after you bought that again. You know.
Exactly. Now, you're the realtor talking to them, though, because there are some that are frustrated, resenting it, thinking about it. And what do? You're the agent that called them. Hey, what's going on? Ah, man, it's funny you called. I was just thinking about this. Really? Well, the good news is you've appreciated this much money. If you want to go look for something else, I know rates are high, like address the elephant. I know rates are high, but let's just see what we could do. Maybe we pull some equity out of this one, keep it, rent it out. You're in a great area. Super Bowl's coming up. Let's get you in another one. I don't know if it'll work. Let me get you over to my guy, Greg, and his team. They're awesome. They took care of you last time. Let's have them run the math. Okay. At least they know their options. But if you're not making the call, someday they're just going to walk out. They're going to flip open the mailbox, see a postcard from somebody. They're going to see 2 signs from the same agent on the street and go, she really knows the neighborhood. Let me just call her. Greg will never know. And they call that agent. And so when you think about it, just being in relationship, like so when you think like what's new, what's cool, dude, what's new and what's cool is what's simple. Call your database,
Yeah.
get engaged with them, be part of the community, get out a food truck. Like we're doing the movie event. We've done them for, I don't even know, maybe 8 years, 9 years. I've done a movie twice a year, except for COVID, where we have people come and we just invite our clients in. Or we do our pie giveaway. So we send it out to our database. We say, hey, if you want an apple or pumpkin pie, we go to Costco the day before. Would we fill it?
Clean 'em
Which
out.
is the best pumpkin
Look at you
pie.
like
Yeah.
are, whoa.
Yeah, we get a couple SUVs full of pies. We order by Friday. We get them on the weekend. Tuesday afternoon, people are coming by the office. But it just keeps us engaged. And like, even if they don't want a pie or come by for a pie, they know they were invited. And that's how I stay in relationship with them. But a real estate agent could do the same exact thing,
Yeah.
right?
And should be.
Yeah. Well, and look, B2B. I mean, we're in a ADP. We've been in there 3 times now, 3 times in the last month, where they have 2,000 employees in Tempe.
Mm-hmm.
We go in there, we set up a table right at the entry. It's in front of the little Starbucks in there. People, it's such a cool vibe in there. But we've been there for 3 or 4 years as their preferred lender, helping their employees, educating them, whatever. But it was shocking. I'm just sitting there at a table and someone walks up and like, hey, it was funny. I was just gonna call somebody. I don't want to rent anymore. And I was like, well, how long you been renting? When's your lease up? February? How much you
37
paying?
years.
2,500, right? But a lot of them were actually like the young kids, and I'm
Oh.
like, oh man, could you imagine getting my hands on a 20-year-old and just showing them the math, right?
Yeah.
Like, what is this going to do for their career there, right? But it was interesting. I mean, how many did you have the one day?
Like 5.
Like 5 people, like all interested in this market, right?
Right.
Interested in it because there's so many questions. And again, I get the same questions like, I don't need 20% down. I'm like, no, you can get 0. There's some assistance programs, grant programs.
That's
They're like,
the number
oh, wow.
one question every time.
Really?
They always are asking if they I don't have 20% down.
Yeah.
You're like,
Or the
well.
score. I'm like, oh, like minimum 550. Like what? Oh, I'm a 6 something. And I'm like, because most credit card statements now tell you what your score is, right?
Right.
She's like, oh, I'm like a 660 or something. I didn't think I could qualify. I was like, wow. Like there's a lot of just misinformation out there.
Yeah.
Yeah. It's insane.
But I love going to business. Imagine a realtor who closed a deal with someone in their database that calls them and, hey, where are you working now? Axon, formerly Taser, right? Oh, wow, cool. How many employees you got there? I don't know, a lot. Okay, well, can I come in and do a presentation about the benefits of home ownership for free? Like make it like it's more benefit for
Yeah.
them, right? Like, yeah, cool. Talk to Patty in HR. Like why can't call your database, rekindle the relationship, check in who they work with, go in and do a home buyer workshop for them. Show them how to leverage real estate. It doesn't take that many, but when you stumble upon a place, we did it was Wolf Air Conditioning, and we went in. They had like 40 people at the time, and I went in with the realtor, and we did a home buyer seminar with them, showed them about real estate and about the math and the programs that are out there, and like it's an employee benefit. But that's a great way to go
Yeah.
B2B and leverage those relationships in the masses.
Yeah. Fascinating stuff. Yeah, really. Just makes my brain hurt. But it makes me understand that, which I've always said this, and it's in every industry. It's all about timing. Because you were talking about, here we are sitting in the place and a guy walks up and says, now, had you been there tomorrow or the next day
Right.
or the day before? Maybe not. You happened to be there the day that they had a need and they thought about it. The number of times that's turned into a sale or turned into revenue for me is amazing.
That's awesome.
Yeah.
That's like marketing, right? They can't flow you any way, shape, or form, do business with you unless they know you.
When you have in the contracting world, I want to be the guy that walks in the day that you just hung up from a call that you're ticked at somebody. They did XYZ.
Yeah.
And you walk in, those are the days that you wind up making a sale.
100%. Well, I want that.
But what Greg's saying, and
Yeah.
I think we all agree, is be there with the solution
Oh,
when everyone
absolutely.
else has been given
But-
problems.
Right.
So I think the takeaway from today was, here we were, we asked you guys to come on, all the media doom and gloom, rates are going up. But I think you painted a great picture today of saying, when you're a solution provider, there's always solutions. Let's always get to the math of it and then work it out. Because the classic example I kept thinking about what you were saying, Greg, is, okay, over here, that $500,000 house, okay, yeah, so the rates are X and that amortizes to Y. But yet over here, I can actually get more house now because that there aren't 10 people in line, and they had to reduce the price by 25,000. Now I'm right back to where I started from anyway. I got into where I was the same. Basically, if you run the pro forma, it's the same. Different set of rules, but yet the outcome is the same.
Right.
And I think that's the lesson in today's podcast was that it's always going to be moving. Okay, it's not always going to be 2.5%. But then on the same token, this ticket price might always have a lesser appreciation at that time when it goes up, and vice versa, and all those things. But it was interesting here. Equity is still equity.
Right.
Sure.
It doesn't diminish.
Yeah. Well, and appreciation still appreciation.
Yeah.
Right. So when you look at it, like if we didn't even talk about that as if I buy now versus later deal,
Yeah.
but if I'm on a CoreLogic national company
Thank
that
you.
does stats, right? They redid their forecast from like low 3% for the future for the next year, low 3% to 3.9. So almost 4%. So they've increased their appreciation numbers because of just sheer supply and demand. That's all they do is the math and the analytics. Well, if you take that out and you say, well, if you did buy the $500,000 house, you're going to be at this 4%, slowly increasing appreciation during this time. But then what happens when rates drop? At some point in time, they come down, and we have this frenzy we're talking about. And people go up and start gobbling the houses, waiving contingencies, getting rid of the seller credit, like all that stuff we just talked about. But we missed the one thing of, I want to be on that road when it hits the hockey stick and jumps up.
Yeah, exactly.
Right? I don't want to be chasing it on the way up. Right?
Is there can you share any data on the appreciation trajectory of what you guys do in your world specific to Arizona?
Well, no, because
Okay.
it'd be a guess. I know it's higher than that because the CoreLogic does national stats, and Arizona's always been higher. But I'd be guessing, and I don't want to.
Okay.
I don't want to do that. To
Well,
you.
no, it was just I was thinking of a way to take away this experience today by giving the audience like some uplifting type thing, and that would be one of them.
Well, the latest that came through the Cromford report was it's around 10 to 13% in Arizona for current appreciation, but not forecasted in the future. So, but I mean, we know that if you're somewhere between 4 to 10, you're doing pretty good.
Wow.
Now, one other question, just quickly. Do you guys ever run the data or the stats on how am I asking this question? That person that's been renting, what they've been paying in rent versus what that mortgage payment is.
We do.
For the similar amenities and all that kind of stuff.
Yeah, we actually have a software program that does that.
What, just at a high level kind of macro summary, what does that keep telling everyone?
That they're missing out mainly on that, like you just said, equity.
Got
so
it.
we're missing out on that appreciation and equity. Yeah, and where that money's going, right? So I'm either paying 100% interest to pay
Rent,
Holly,
which
who
is
owns
rent.
the house,
Yeah.
my rent,
Yeah.
or I'm paying myself with, yes, I'm paying the interest of my loan, but I am paying the principal, and I'm gaining all that appreciation, which is the number one thing that's the miss. But we literally I punch in 4 or 5 fields, and it tells me, your rent versus what the house you qualify for, and then what the difference is over 1 year, 5 year, 10 year, however far we want to go out. But typically it's that 5 to 10 year average.
Awesome. Well, it's been fascinating.
This is fun. Thanks, guys.
I don't know how
If
an
you
hour
smell smoke.
I don't
But
know.
yeah,
That was
it
quick.
happens every time.
I don't know how it
Okay.
went by. Sorry, Holly, we didn't give you more
I
platform
love
time.
listening to Greg. I could just sit here all day and be like, wow, because
It's
it still
nice.
blows my mind.
Unbelievable. We will definitely have you both back on again.
We would love that.
Yeah.
Thank you.
Thank you so much for being here today.
Yeah, go ahead.
Appreciate
Get
it.
us out. Get us out of here.
You've been listening to the Mac and Blue Show, brought to you by Torrey Contracting and Blue Wave General Contracting. Be sure to subscribe to the Mac and Blue podcast on your favorite podcast platform. Follow Robert Johnson and JJ Levensky on LinkedIn and Instagram. Tune in live every first and third Thursday at 3 p.m. as we continue to introduce you to the people building Arizona. Walt Disney said, "You can dream, create, design, and build the most wonderful place in the world, but it requires people to make the dream a reality." Until next time, make it a great day.